Hello everyone and welcome back to my morning report analysis videos on Monday the 9th of January with me, Rich Perry, market analyst at Handset Markets, looking at dollar yen. We've seen this sort of strong rebound on Friday on the back of the payroll support, very bullish move. He's sort of not really been able to follow through quite yet, only 12 ticks up on the day, and that's back from 117.50, which was the high of the day pretty much, so about 50 ticks unwound from the highs. But you look at this sort of move that on Thursday we topped out on dollar yen, but big turnaround, big move, big rebound, and that sort of turnaround came just above the support band, 112.84 to 114.82. So you're sort of back in control, really. I mean, but these momentum indicators have still obviously got the legacy of this breakdown and this sort of consolidation and the drift that we had. So the negative connotations of that, but still you're seeing the stochastics coming together again. A positive day today will possibly help to drive an improvement in those momentum indicators once again. I think RSI back above 60 would probably be seen as a positive signal, so the stochastics crossing higher. Back above 50, I would argue, would be positive on that regard. So there is the prospect still of this. Well, I mean, I still believe that little corrections on dollar yen are a chance to buy, and I think this ultimately is sort of a medium-term consolidation move rather than sort of the start of a big corrective move. And you see this hourly chart, and you sort of look at that breakdown. Having been completely unwound now, really back above the sort of resistance band that I've got in here on the crosshairs as 116.75. That sort of probably needs to hold to keep the bulls back in control, because obviously that would take you sort of back below these sort of several of the moving averages, really. And the thing that would concern me, I suppose, is these crossovers on the hourly MACD line and the stochastics, and maybe there is a little bit of a drift lower back into that 16 figure area. So I think 16 figure, if you sort of move below that, then yes, I think that would be once again a bear move, because you'd be back below the breakdown point from the original little top pattern. So maybe this is still part of playing out part of this consolidation on dollar yen, rather than sort of the start of the bulls back in control again. But I think there is a few question marks still hanging over this chart, and I think the support that we get in the next 2 days or so could be important to sort of be gauging the outlook of this chart. But for now, I think there's still an element of rebound that we've got with the higher lows on this chart, but a move back below 16.75 wouldn't be all that great, I think, for the near term. But holding above 16 figure, I think, really maintains this as a consolidation. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.